Hello and welcome to the home of profitable high probability trading. My name's Tim and I'm one of the traders here at the live trade room. Now we're about to trade the US trading session fully live and interactive, so you're very welcome to join us. Now for those of you who are interested in genuinely learning how to trade these financial markets with a high degree of understanding and knowledge about how these markets move, with the ability, of course, to make consistent and quite disciplined returns in these trading market conditions, then we can really help you as an individual. So you feel free to go to our website, www.thelivetraderoom.com, for more information, and we'll be happy to discuss some of the options available. We've got a wide range of products and services, all designed to support you on a daily basis, all at very, very low cost. So have a look there. So over the next hour or so, what you'll see from us is how we go through the process of deciding which markets we should be looking to trade. We'll set up our trade plan for the session. Basically, we'll fine tune, we'll focus, narrow our attention on very specific markets for very specific reasons. We'll go through the news flow. We'll see if there's any news events that are likely to impact some of our trading decisions, and we'll give you a concise, I suppose, overview in terms of what's required to be consistently profitable in this environment. We do look at the foreign exchange markets. It's not just trading foreign exchange. We do look at trading commodities as well, like oil and gold, and also looking to trade your major global indices as well. So having that understanding of multi-asset class is really quite useful, because we can identify certain correlations across these markets. And all that ultimately does is give us a little bit more confidence, along with our technical understanding of how to read price action. And it just gives us a good, strong foundation. And again, it's that confidence behind your decision making that's all important for traders. Okay, so without further ado, please see our risk warning currently up on screen. And so the first thing really, of course, take note of our risk warning. It is obviously very important for traders to be very mindful in terms of your approach to risk. It's from this ability to manage risk effectively is what gives us that platform in which to make consistent returns. So it is a trade-off between risk and reward. If you take more risk, you can expect more return, and vice versa. If you take less risk, you should be expecting less return. So that's what trading is. So without further ado, then let's start by having a quick look at some of the the major market events that are likely to impact our decision making, and that's what trading really is all about for us as traders. So currently up on screen, so today is Monday the 8th of March. So in fact, we'll have a quick look through some of the events for the whole week actually. Being a Monday, it's always good to, I suppose, integrate you into these markets, give you a snapshot in terms of what you're likely to experience for the week ahead. Sorry. Okay, so what we have this week is a number of central bankers talking in these markets. So today we've had the BOE Governor Bailey due to speak about the economic outlook at a webinar hosted by the Resolution Foundation. So we can see that pretty much across the board. Tomorrow night we have the governor of the RBA delivering again another speech about the recovery, investment and monetary policy, very important for the Australian economy. We'll have the BOC on Wednesday. Very quickly we'll have the ECB with their policy statement, their refinancing rate and press conference. And nothing, as you can see, on Friday. So we've got on Friday afternoon, we've got Canadian employment numbers. Elsewhere, slim pickings really, isn't it? But Wednesday we've got CPI, which will be interesting from an inflation perspective, impacting the US dollar. Wednesday lunchtime. And that's pretty much it for the week. There's nothing of any major concern. We had a lot of major events last week, so it's interesting to see how those markets are going to continue to play themselves out. So let's get into the charts then. And we often get asked by traders, how do we identify the high probability trades that we look to trade? And to try and answer that, we'll go through that process now in detail, with you. So what we're going to do is we're going to do a bit of multi-time frame analysis, and it's really important to be able to understand what's going on in the bigger time frames, and I suppose have a means by which you can prioritize. You can sort of prefer to choose some markets more so than others. And one way to do that, there is a few ways of doing it, but one way to do it is to monitor the bigger time frames. So looking at weekly and monthly highs and see how price interacts around those levels. So a good example, we'll start with euro dollar, as you can see. Okay, good stuff. So as you can see, we've got these green lines at the top of the screen. We've got a monthly high in the euro dollar at the 122.41, and that's last month's high. What we also have down here is the 119.51. So really, for the majority of February, this market had been moving sideways between 122 and 119, let's say, for argument's sake. So we've been trading within a sort of a 300 pip range. Now, something very interesting occurred on Friday, where we actually saw markets break through a very important level here to the downside. So we're looking at the 1951 level, and we can see on Friday, with Friday's events and what occurred on Thursday as far as the Fed's concerned, we saw prices, take a really volatile move to the downside with momentum and follow through and volume, which is kind of what we want to see. We don't really want to trade what we think, we want to trade what the market is doing. So when we see momentum and volatility and volume in these markets, we then sit up and take note. And what we can see is that momentum and volume and drive is pretty much to the downside in the last 4 trading days in the euro dollar. So when we look at this on a bigger time frame, we can get a really good idea to see roughly kind of where we're at in these markets. Sorry, so if I just get up my pen, because that will help. So what we can safely see is there is we have this level just sitting in there. We've been in a bit of a downtrend as far as the euro dollar is concerned for quite some time. We can focus in a little bit more detail about the change that we've seen in and around this type of price action here. Something quite significant changed. But we can see that since 2009, since the financial crisis, the dollar has steadily been strengthening. Now, if I take that off and we'll just zoom into this more recent area down here, we had a very significant structural failure to the upside. So that's when your bias can then begin to shift from, in fact, what I'll do is on the monthly time frame, let me be too exact, but we can see that around this kind of area, it's really quite important for this market. And we saw a clearly defined break to the upside above the 120 back in December, isn't it now? So January, February, March. So a really strong finish to the trading year for the euro dollar. And so far this year now in 2021, we're seeing that unwind a little bit. We're seeing prices actually now squeeze over to the downside. We're running back into this level of support. We've got a 100-period moving average on a monthly time frame, which is really quite significant. And now when we zoom in, prices are beginning to roll over to the downside. We are able to see this structural failure trade. So that's when the market fails to make a new high. So now what we have in this market is a high followed by a lower high, and we can identify the low. And now what we've got at this point in time, and we very well may continue lower, is a lower low. So this is the beginning of an unwinding of this move to the upside, where we're now looking for opportunities to sell. So we've been in this from last Friday. We needed to get the confirmation that we were needing to be able to get into this trade. So sorry, I'm not too sure why that's a black color. That should be green. So let me change that quickly. So this is our sell trade to the downside. We have a stop loss up here. And we can now mitigate. Now prices have continued lower. We can now mitigate risk on the trade. In fact, we shall do that now, just so you can see that level. So we're very proactive when it comes to managing trades. So we don't want to leave any capital on the table if we can avoid it. Our objective number one for us when we trade is to mitigate risk as quickly as we can, and then we can look exclusively at opportunities to maximize our profits. So it's almost getting rid of one facet of trading, which is loss taking, and really get into the routine of taking risk off the table and then focusing on a profitable outcome. Okay, so let's take the high then. Just on the left hand side of the screen you have your data window, so you can see very clearly the high. It's the 1931. We can have a 2 pip spread on this, so we'll add 4 pips to the high, which is the 1935 level. So we can mitigate risk on this trade pretty quickly. We'll modify the order. So currently our stop loss is 1963, and now we can take the majority of the risk off that trade, bringing our stop loss down to 1935. And just please note, we never put our stop loss exactly on the high. We want to make sure that it's 2 times the spread, whatever the spread and whatever market you happen to be trading. I suppose it's a rule of discipline, really. Make sure that you avoid getting stopped out at those specific highs and lows. It's uncanny how often markets bounce off of daily highs and bounce off of daily lows. So you actually want prices to break through those levels. So if we apply a 2 times the spread rule, then that can keep you on the right side of some of those trades. And that's from an entry and an exit perspective. So so bear that in mind. But as you can see, we've virtually got very little risk on this trade. Prices are continuing lower, and we're only just below the monthly low. So we initially called a sell up here at the 121.50 level. We've seen prices eventually continue to the downside. But when you're looking at the bigger time frames, we're only just breaking through this level now. As you can see on the daily time frame, the structural failure to the down trade was actually only on Friday. So so there's no reason why we can't expect more. We probably will get a bit of a pullback at some point, but we'll trade the momentum. What would we expect this market to do from here would be to continue further to the downside, and that's what we'll plan on trading. So from I suppose a trade selection perspective, and today is the 8th of March. We can definitely look at the euro dollar to the downside, and really it's a dollar strength story that we're looking to try and capitalize on. Good afternoon, Finbar. I hope you're keeping well. So next is the pound dollar. So we're in a slightly different situation with many of these markets, and that's what allows us to determine which market should get our focus and which shouldn't. So very clearly, the euro dollar breaking below the monthly low, direction on the monthly and the weekly candles to the downside, got nice strong momentum lower. So as a result, our logical conclusion is we're looking for buy trades in the euro dollar. Finbar, fantastic. The euro dollar, your entry was the 1948. Fantastic. Yep. So it was just a little bit higher than our entry. So fantastic. It was below, just marginally below that 1951. So a fantastic entry. We too were in it, as far as our sort of personal accounts are concerned, much earlier as well. But from a probability perspective, it becomes a high probability below the 119.50 level, and a really good trade to the downside. So yet another one that you can add to your list of profitable trades. So well done with that. But you can see that the pound dollar is not quite in the same zone. We're only in the middle of monthly highs and monthly lows. So so that's worth taking note of. So there is a potential for a bit of support, but what you'd want to see really, and there is an opportunity to trade some of these dollar pairs slightly differently, but what we want to try and do is focus on probably more your high probability trades, which are the markets where we're likely to get some continuation. For example, the dollar yen, where we're easily above the monthly high. We're getting close to these highs now, which would just simply signify the potential for the next opportunity to the upside. So we can look at the dollar yen. You see, no one really knows when these markets will stop moving to the upside, like the dollar yen, for example, the 108.65. And by the way, the euro dollar trade. So on a Monday, we'll spend a little bit more time just preparing for the moves and the opportunities. So I'm going to change this level. And preparing for these markets is really what trading's all about for us. So we're looking at the 1891. So obviously we're below that, so we can look for a pullback and look for the extension move further to the downside. So the third market, which is obviously accelerating to the upside, which we're in on the intraday, on the daily time frames. We're in a few of these dollar trades on the daily time frames, which are performing really quite well so far. The dollar Swiss. Again to the upside, and it would be above the 93.17 level. So above the daily high, we'd expect continuation, and we're currently seeing that, so we can add it as a viable trading opportunity. Dollar CAD just drifting sideways inside this range. We're between the monthly high, the monthly low. So there's probably an opportunity actually for a breakout trade above the 127, and again to the downside below the 125.92 level. So when we're in this little range here, this little was it 130 pip range, we'll let price break out of those ranges, and then we can look to maybe get involved. The more longer term, we do like the commodity currencies to push higher. We're not really seeing those opportunities just yet. So they're actually just rolling over, especially against the US dollar. And again, we're firmly within the monthly highs and the monthly lows. And it looks like prices could actually squeeze a little bit more from here to the downside. So there is a structural failure to the downside. It's not that convincing. It'd be interesting to see what happens to this dollar pair over the course of the remainder of the trading day. But from a probability perspective, it's not the most primed opportunity to want to get into. Same situation to a certain degree regarding the New Zealand dollar. So we've made a high, markets are flush to the upside. We've actually made a lower high now, followed by a structural failure to the downside, and now we're testing these multi-lows. So actually a breakthrough to the downside in this market would be a high probability trade. So it's not a great trade just yet, but we can certainly take the monthly low, which is the 17.90 level for the New Zealand dollar. That's not in a bad position, and as you can see, all of these trades are stacking up as dollar trading opportunities. So as a result, because we're seeing the capital come into the dollar trades, and we can see capital coming out and getting the approval from the indices market. So there's capital coming out of riskier markets and asset classes, and they're moving in to the dollar. That's one of the main beneficiaries of some of these moves that we're hearing about and we're seeing. More importantly, we're seeing them. So the European markets are in a slightly different phase. The FTSE has taken the same role to the downside as we've seen in the US indices markets. But the DAX has seen I suppose a refreshing drive to the upside, but we're just broadly in this little range, firmly between the monthly lows and the all-time and monthly highs. So there's probably reasons to just keep your powder dry with some of these markets. The Nikkei is taking a bit of a roll over to the downside as well. We're firmly in the middle of last month's trading in terms of the highs and the lows. So again, we can discount that slightly. Bitcoin, it's really not. It's not doing an awful lot really over the last few weeks. So we'll just monitor the price action really, if anything else. But what we can say from these indices markets is that we're in a risk-off market conditions. So we're seeing the dollar be the main beneficiary of these trades. So we're seeing a further drive to the downside for gold, and we're seeing the dollar strengthen against the major currencies almost across the board. And some are slightly in better positions than others. For example, the euro dollar, dollar yen, dollar Swiss, and New Zealand dollar are certainly markets that we will there's certainly markets that we'll prefer to keep a good eye on. The euro pound to the downside is still a viable trade. We had just one day really of just significant volatility to the upside. We had a really good strong sell trade in this up until the last week and a half, and we saw a strong rejection of those lows followed by the grinding sort of price action lower. So we do expect that the pound to continue to strengthen actually against the euro, but we've got the monthly low, so we'd want to see prices react in a predictable manner down to those lows, and it's probably not that likely to be the case. So maybe tomorrow we can have a look at that in a little bit more detail. So the euro yen, what we can see here is this market making a recent high, and it looks like there's a little bit of rollover price action in this market. So we're seeing prices push higher, pull back, and then actually create a lower high. So will this market squeeze further to the downside? It's probably likely over the short term, but again, from a high probability trading opportunity, it's not fantastic. Again, we don't see the momentum, the drive, the volatility. We don't see that in markets like this. And the pound yen, it's very close to sort of wanting to break that monthly high over the 150.40 level, but we're failing to do so. So unless that happens, we're not really seeing your traditional safe havens kick in actually just yet against the majors. Against the US dollar. So when you saw capital, previously we used to see capital come out of the indices markets, it will move into your safe havens, like gold would push higher, the yen would push higher, the Swiss franc would push higher. But as you can see, the main beneficiary basically since COVID, March 2020, we've actually seen pressure on these markets to the downside, and significant downside. So it's left with the dollar picking up the pieces and benefiting accordingly, which is why really our focus has been on the US dollar. The oil markets, the gold market is very similar to the other dollar pairs. It is crossed with the US dollar, so we can expect further downside in gold. The level which we are taking is the 1684 to the downside for gold. Crude oil, it's gapped to the upside. We extended moves higher and then followed by a fairly strong rollover to the downside. So really, if this market can come back to the $63, then we can probably look at getting into some buy trades. We don't have the confidence really to be selling at these current levels, although a break below the daily low would imply and suggest that we get a little bit of short-term selling below the 65.59, but perhaps tomorrow can give us that opportunity. But if we get some indecision around 63.76 level, then it's a viable trade to the upside. So we'll keep a close eye on it. Probably tomorrow we'll have a look at that in a bit more detail. The S&P, the equity, the US indices are all rolling over to the downside. So I suppose the reason why we didn't get into the strength trade for the indices markets was because it was a counterintuitive move. And they started rolling lower and then subsequently reversed. So the situation for the indices markets is quite interesting and quite nuanced. So of course all of the the accommodation's still in place, the interest rates for lower. The Fed don't seem to be too concerned really about some of the impacts or the overheating or the fact that the economy is coming back to some form of normality, and interest rates are which are at record lows, that are not going anywhere for prolonged periods of time. But if you have this sort of inflation environment, then the Fed would probably need to increase interest rates to kind of offset the downside effects. And the problem with that is it increases everyone's repayments and debt repayments. So at the moment, the Fed are suggesting that the short-term spike in inflation and increasing bond yields are it's a short-term issue. So they believe that they will settle down shortly. Some of the significant selling we've seen in some of these markets do kind of suggest otherwise. More importantly, the tech, this is a structural failure to the downside now. So for example, tomorrow could be a really interesting sell below that 12,379. There's no reason to suggest why these prices wouldn't continue rolling over to the downside. So Dow Jones, the FTSE's taking, it's been a horrible market to trade really. The DAX is actually pushing higher. European indices are sort of finding a bit of a bid, and FTSE's rolling lower. So what this a bit of analysis has done just for the last sort of 15 minutes or so was to just prioritize which markets should we be looking at. Now, the one major problem that stands out from our trade plan for today's trading session is the fact that they are all correlated. So we put them up on screen and we'll create our trade plan, and we'll see where the opportunities lie. So the euro dollar, the dollar yen, just down here. The dollar Swiss next, just next to the euro dollar. The New Zealand dollar. So we're getting close to that monthly low, which is an important level. And then finally the gold. So we'll just stick this up in the top right hand corner, and not that we're looking to trade it, but we would be interested to see what's going on with the US indices over the course of the trading session. So it was interesting to see, we saw a gap to the upside, so an initial bit of positivity for these markets followed by the rollover to the downside. So our bias would be to the downside in these trades. So okay, so as we approach the US Open, then we can look for these trading opportunities. So we can have a look at them on the smaller time frames now. So just to clarify, we're looking for further selling. So let's have a look at the hourly first. So nice strong momentum move lower, bit of perhaps minor hesitation down at these lows, but nothing of any major significance. We do have our squawk, which will give you updates as well. So this is where our technical analysis comes in. We know what we're looking to do. We know what we're looking for opportunities to sell. The price action is not that fantastic, to be fair. So we've really seen a 15 pip range in this market from the 1880 to the 1865 in the last in the last 4 hours. So in the European session has yielded pretty much nothing in this market. So unfortunately, as a result, what we would like to see is a structural failure trade. Sorry, is a pullback. So what we would like to see now with this euro dollar trade is prices actually pull back to this level in and around this type of zone, and then we can look for the next selling opportunity. So that's the type of price action we'd like to see, and unfortunately we'd need to just be a little bit patient for that trading opportunity. So yeah, and it would coincide with a 1900 level. So we'll just label that so you can see it clearly. So we're looking for a pullback. This time it's a sell trade. Okay, so we're looking for this around the 1900 level. So that's the level to keep in mind, in and around this little zone just up here. And because we're looking for a sell trade, we'll keep we're already in this trade, but so that's what we're looking for. We're looking for that. So it just gets a bit fidgety after a while. Okay, so we're looking for a pullback trade around the 1900 level, and we're just down at the 1862. So a clearly defined pullback required for the euro dollar to get in at these lows. Sorry, I keep moving that around, so I'm going to leave that exactly where it is. So the dollar yen could absolutely give us a decent opportunity. Let's go in and see what's been happening over the course of the morning session. So we've had this sort of continuous sort of higher highs and higher lows type market condition in this. And we have this little peak in here. So actually, this market breaking above, which we're there now, the 108.65, we do have a natural stop loss. So we're just breaking this level. Has it got more upside potential? There's no reason why not. Absolutely no reason why not. So it's interesting to see like the 50 period moving average on the monthly time frame. The 109.15. So there's clearly an opportunity to the upside. So on the 15 minute, it looks like we're getting close to that move to the upside. So we'd have some US capital coming into these markets in about 9 minutes in terms of volume. And this market is extending its move to the upside. So we look from a risk perspective, we'd really have to work with the 108.09 level. So we're looking at kind of at least a 55-60 pip stop loss in this trade. So it's a breakout trade above 108.65. So that's basically what we'll be working with. So the type of trade we're looking to get into is a breakout buy trade, and it will be above that very important 108.65 level. 108.65. Yeah, with a so it's a breakout buy trade. It's a breakout buy trade above 108.65 with a stop loss at 108.08. So just want to check that stop loss quickly. 108.09. So yeah, 108. Okay, dollar Swiss next. Just continuing its move to the upside. We're above the daily high, so it ticks all the boxes. Now we can go into the smaller time frames, determine what we would like to do and how we would like to trade it. It is a momentum trade. It is the type of trades that we do like to get involved with. Yeah, Finbar, the dollar yen trade, isn't that a long trade? Yes, it absolutely is. So it's a breakout buy trade above the 108.65, which looks correct with a stop loss of the 108.08 level. So that seems correct there, Finbar, if I understand you correctly. The entry was 106. Oh yeah, sorry, that was a market that we were in up till last week. So if you're still in that, you keep it, absolutely. We're extending, we're making new highs and stuff. We did take profit going into Jerome Powell's online webinar. So it sounds like you're still in that trade. Would that be correct? That dollar yen trade? And if so, very, very well done. Like that's probably an extra 3% profit on that trade now, I'd say, something like that. Okay, that's the 108.65. Yeah, good. So well done for still being in that then. The dollar Swiss. So now we've actually got that bit of a floor being created in this. So looking to buy above the 93.45. 93.45. With the stop loss at the 93.25. Yeah, and that's another buy trading opportunity there. And this New Zealand dollar trade is a sell trade this time. So let's label it. This is 1790. Okay, so we're going to continue to monitor this trade on the daily time frame. So the breakout trade is above the 108.65 and we're at the 108.69 trade. So let's see if we get a close on that now in the next minute or two. Same situation for the dollar Swiss, looking to get in above the 93.45, and we're just above that level. We just got enough time to just get this trade in. So so we're looking for selling opportunities. We're below this level. Let's go in at smaller time frames and we'll see how the opportunity stacks up. So you can see that there's multiple lows in these markets. So that for us is we want to see prices, you know, clear those levels with some conviction. So unfortunately for this one, it'd have to be kind of a close of this one to the downside, and you do have quite a large stop loss, with a stop loss just placed up here at the monthly low. So we'll do a little bit more sort of technical analysis just to see if we can position ourselves. So we're looking to really sell below the 1684, and we've got a stop loss up here at the 1714 level. Is there much more room to the downside? Absolutely, loads and loads of room to the downside. So we're currently seeing a little bit of buying creeping in. A pullback back to the 1700 wouldn't be a bad trade either. So we're either looking for a pullback trade or we're looking for a momentum trade to the downside. So why not prepare for both, perhaps? Okay, so we can either get in on the pullback around the 1700 level, or sell below, or sell below that 1684. So we've actually got a couple of opportunities with this one. So I'm just looking at these little closes now, so we'll see if we got some opportunities in these or not. So momentum sticking lower in the euro dollar, sticking to the upside for the dollar yen. We just want to see the continuation move. So when we get the close above and we get the close that we're comfortable with, we then want to see the continuation trade, and it looks like we're getting that trade now. Just to mark that level, here we go. So we can get into this trade here and place a stop loss below the 93.25. We're just at that 93.50 level. So we can absolutely get into this trade. So let's take this trade live then now. So we'll place the new order. So really we have, I suppose, a 30 pips stop loss on this trade. So so our stop loss is the 93.21. 93.21. Make sure you calculate at the correct trade size for a trade of this size. Make sure you're within your risk profile. Okay, so our stop loss 93.21. We're just breaking above that. We're getting in at 93.51. Oh, sorry. The 93.53. Swiss. 93.21. Okay. Don't know why that didn't go through first time, but we got there in the end. So if we just zoom out, so we're buying the momentum high, and we have a technical stop loss just sitting in here at the it's below the 93.25 level, which is the 93.21. Okay, let's see if we get follow through in the dollar yen as well. We don't want to overload on the dollar at these sort of extreme levels, but 1 or 2 would be very workable. Okay, so I'm just letting my other traders know about this trade that we were just able to get into. So they can have a look at it in their own time, of course. 93, and our stop loss is the 93.21 level. Okay, so we just we're already selling the euro dollar to the downside. We've just got into the dollar Swiss to the upside. The New Zealand dollar is getting really close to that monthly breakout level to the downside, which is an important level in this market. I'll show you the potential downside, which is very significant. So we've got this even on a monthly time frame. We've got the move to the upside, we've got the indecision, we've got the false breakouts to the highs, we've got everything we need, the rejection of the highs, and we've got this little turnaround trade. It is in keeping with the dollar strength trade, which we're currently seeing across the board. So it's an important trade. And it's in a slightly better position than the Aussie dollar is at the moment. We're still a little bit far away from that monthly low. And if you can assess these monthly highs and these monthly lows that we talk about, and for our traders at Live Trading, we do a monthly review as well. So we discuss these levels in details, and every evening for our Trade Plan Live webinar, we discuss those levels, and it really does help us prioritize which markets get our focus, which is why we're in the euro dollar trade to the downside below the monthly low. You can see the continuation trade further lower, and we're getting that, hopefully that the opportunity next will be in the New Zealand dollar to the downside. So it gives us a green light to go with some trades, and it gives us I suppose the amber light to be a little bit more patient and just wait for the time and get the timing right. Make sure the levels break the important levels, and that should be able to help you quite a lot. So we're still looking for that breakout sell trade, as you can see below the 70.90 level. The Aussie dollar. So the dollar Swiss we need to put in just up here. The dollar is extending his lows. Okay, so we're getting close to that flush trade to the downside. Okay. Okay, so okay. Okay, so just bear with me a moment and we'll come on to the assessment of some of these other trades. Okay, so let's see what else we've got then. So sorry, I'm just organizing just a few things off screen. Okay, there we go. Okay, so where are we at? Where are we at? So we're getting a little bit of a bounce off these lows. The gold, little move to the downside. So it would be preferable for us to be selling gold around the 1700 if we get a little bit of a pullback to that level, and hopefully we will. It's only sort of $10 more, so it might give us an opportunity to sell that market at that level. We had a nice flush to the downside, so maybe there's a little bit of reversal price action back to the upside for the equity markets. So we'll keep a close eye on these current levels, see how they perform. Currently getting a bit of a sort of bit of softening or a bit of mild pullback really in our momentum trades for the dollar yen, the dollar Swiss, and we can put the euro dollar into that category as well. So of course, when we trade financial markets, we need to be prepared for the nature of these markets. So as you can see, they move in this fashion, and we can expect that, you know, that type of sort of grinding price action to the upside. We can really expect that to continue. So we're currently getting a little bit of a squeeze on these trades, but still, you would still prefer to be buyers of these markets rather than sellers right now. So it's the structural failures we've got to keep a close eye on. Yeah, so sorry, Finbar, your take profit, yeah, is it too high? Well, we don't really use take profits, so when we get into a trade, we place a stop loss, so we make sure that we limit our losses. So we'll cut our losers short. If they don't perform as per our expectations, then we'll get rid of the trade. So we definitely limit our losses. We cut our losers short as best we can. As far as our profits are concerned, we have reasons to get into trades, and then we look for similar reasons to get out of them. Sometimes that might be for a break even, sometimes it might be for a small gain, sometimes that might be for a small loss, sometimes that might be for a huge gain. So that's really what we're trying to focus our attentions on, is trying to capitalize on those huge gains, because we don't want to limit the upside. And I know you've been in quite a few sort of momentum-based trades recently. So that's the benefit of being able to identify those firstly, and then be able to trade them properly, and try to give those opportunities give every trade that opportunity to grow and develop. And some will and some won't. That's just the nature of trading markets. And when we're right, we see a sizable return. When we're wrong, we make sure we limit those losses as best we possibly can. So for example, the euro dollar sell trade, we're virtually breaking even on the trade. Prices are continuing lower, and as long as that trend continues, we're very comfortable sticking with it, because we don't know whether the euro dollar will be down at 117, 116, 115. We have absolutely no idea. So we don't want to trade what we think will happen. We want to actually trade the price action. So if we start seeing multiple structural failures where prices are reversing back to the upside, then it's the market's telling us to actually get out of that trade. So we let the market decide when we exit. And obviously it takes a bit of time to get used to being able to do that, but it does mean that you're stacking the odds in your favor when you're correct. And that can have a really positive impact, not just on a trade by trade basis, but for a longevity purposes, for a skill that you can learn over the longer term, and be present, and looking for these opportunities across these markets. And some years you might make a relatively small return. Other years,
a spokesman for UK Prime Minister Boris Johnson says Britain has previously set out their position on wanting other countries to come to the COP26 with meaningful objectives.
Okay, so that's our Squawk service just in the background, just to share some of that content with you. Really useful.
The spokesman says the UK Prime Minister also dropped into the meeting with the US climate envoy Kerry on climate change and COP26.
Really useful around sort of very significant market events. Let's just have a quick look at the indices markets, because we're seeing a bit of an unwinding of these lows. If I just mark this low just in here. And we can see
news from number 10 is confirmed UK Prime Minister Boris Johnson is planning a cabinet reshuffle in the months ahead, with more women set for promotion to make his top team more representative.
Okay, so we can expect a reshuffle. The cabinet in the UK. So the S&P 500, you'd have to suggest that we would be a little bit more bullish now at these sorts of prices. So what we've clearly really seen is this market flush to the downside on Friday, create a bit of a low, and we failed to break that low. So we've tried on a few occasions, and we actually saw a structural failure to the upside. So we made a high on Friday. The market bounced back to previous levels of support and resistance in here. It's the 3800 really, and that's why a lot of these markets, they look at these major psychological levels like your 3800, your 3900, your 3600, whatever the case may be, and prices can be sucked to those levels, and they can give you some really good opportunities to take the next leg to the upside. The question really now becomes whether this market truly has the bullish aspect to this trade to actually break above the 38.69. That's what's likely to happen. Will it happen? If it rolls lower, then we're going to see probably some more buyers running for the exits in these markets. So we're in a kind of a precarious position, which is really why we're not wanting to just jump into these markets yet. We're monitoring this high and we're monitoring these lows down here. So you can imagine when we get this little breakout trade, we get a pullback to previous support levels, which now become resistance levels, which now become levels of support. Then we would expect this market to be breaking above the 38.69 level. Has this market got the enthusiasm, the momentum, the fundamental backdrops to see prices break these highs? Right now, there's a big old question mark behind that. We're just not too sure just yet. But as always, let's see. Okay, so as for gold, you got in last night at the 1696 level with a trade stop loss at 1732. What's your thoughts on this? Okay, so let's go in and have a quick look. So really we're in this, if I just zoom out, like this isn't great price action. It's a difficult market to trade. Major flushes lower, multiple occasions. Will we get another major flush lower? Maybe just being a Monday, the market's just going to ease themselves in. We actually gapped to the upside, believe it or not, with this trade. Before we got the very significant pullback, and now we're extending moves to the upside once more. And as we can see, we can see that the dollar is reacting accordingly. So let's have a quick look at gold then. Okay, so broadly speaking, if we just zoom out first and have let's see what's going on in the bigger time frames. Last month we saw a very, very important structural failure to the downside. So then our buyers start shifting lower, and we're now below last month's low. So really we'd expect continuation to the downside. So we're in this trade to the downside on our daily time frames for that reason. And on the daily time frame, it's slow grinding, isn't it? So it's just really one of these that we need to give a little bit of time to. Your stop loss is the 1732. It's just up at this level here. So nothing wrong with your entry below the 1700, below the monthly lows. That's fine. The entry level, the stop loss. Is there a particular reason why you've picked the 1732? We would always look. You want to give it a bit of room, of course. I appreciate that, but just from a technical perspective, I would suggest either choose the 1722, which is your 3-day high, or your 4-day high at the 1740. So you're just in between those two levels. So maybe the 1722 really is from a technical perspective, it's absolutely fine as a stop loss. It's a 3-day high. It's above the monthly low. It's above the 1700. So you're kind of straddling a lot of the correct levels, and you're able to give this trade a little bit of room to the downside. Yeah, so you got in last night. So there's your little pullback trade. So you probably got in and around these levels, little structural failure trade to the downside, this little flush to the downside, maybe somewhere like that. Absolutely fine. We did gap up, so that's always interesting. But then the dollar trade started to kick in again. Yeah, just giving it a bit of breathing space. There's nothing wrong with that. Obviously, you need to be able to calculate trade size properly. You need to really know the pip exposure for the trade, and it's much greater when you're trading gold, of course. But you know, still probably try to even look at the daily time frames and try to broaden your horizon, but do it from a technical, objective perspective rather than a sort of an arbitrary level that you've just picked out of the air. So if you can look at these daily highs, and it's, you know, just looking at this price action, really it's either the 1722 or the 1740. You know, try and get that technical sort of aspect to your trading. Yes, we do take on board the fundamentals. We allow them to guide us in terms of opportunity. We're very comfortable doing so, and but we technically enter and exit trades, and that's the important part. Okay, so I do apologize, guys. We do need to shoot off. The euro dollar trade still to the downside. We've pretty much broken even on that market. The dollar Swiss trade, which we just got into, just to show you quickly, it's the breakout trade to the upside. We're currently experiencing a little bit of a pullback. We'd expect you know, further upside when these markets do roll around, and what we want to avoid is that rollover trade. You know, we want to avoid this market ticking to the upside, failing to make a new high, and then that kind of rollover price action. That would be a bit of a concern, but we haven't really seen that yet, so there's no reason to suggest we would. Currently we're just experiencing just a little bit of a pullback on this trade. Okay, so those are our trades. The S&P, we're finding a bit of a bid in the S&P 500s, so there's a little bit more capital flooding into the stock markets. And there's reasons for that as well, of course, because of the fundamental backdrop. You know, there's huge accommodation for these trades. The New Zealand dollar really below that 70.90. Would we only get interested in that? Bit of softening in the dollar yen, and same situation in the euro pound. Sorry, the euro dollar, should I say. Okay, so listen, on that note, we do have to wrap it up there. We will be live again Thank you very much as always for joining us. Do take care, and we look forward to seeing you soon. So from everyone here at the live trade room, bye for now.